banks have really thrived over the last 3 years because you've seen bond yields rising sharply and risk premia, look at the high yield credit spread, going to all-time lows. If you want to have further upside for the banks, you have a story to tell of why bond yields will continue to rise or risk premia will continue to compress. And at these levels, it's very hard to see that. On the other hand, if the macro cycle weakens, central banks start cutting and some risk premium is restored, then this outperformance that you've seen over the last 3 to 4 years will start to roll over.
What is in the driving seat, Sebastian, for French assets into the weeks and months ahead? Because we're talking here about a very idiosyncratic French story, and then you're taking us back to the sort of bigger picture European backstory. And I wonder which will be in the driving seat. Will it be French politics that continues to drive the banks, the construction businesses that we see rebounding so strongly this morning?
I mean, I would make 2 points. First of all, the market is rallying today, but if we take a look at what has actually happened, it's very hard to sell this as good news. What you had is a scare and a sharp underperformance by the French index, not so much by the banks, but by French equity specifically. It's hard to argue that you got a good outcome. Maybe you block a majority by the hard right, but in the best case scenario you get a hung parliament that effectively means very little decision making, no ability to deal with a very wide budget deficit, and also the European integration story effectively put on hold. That is effectively the avoidance of a bad case scenario, but by no means a good case scenario. So I think to come back to your question, if the macro cycle rolls over, that's going to be center stage. If it's all about French politics, it's really about, there's no upside. It's really about having avoided the worst case.
And if the macro story rolls over, where does that rollover come from? Are you talking about the US and what happens to the US consumer and how that filters through into European stocks, or is it something more homegrown?
I think it's both, because in our understanding, and of course we've discussed it many times, the main driver of the macro cycle is monetary policy. It takes a while for this to feed through. Very interestingly, we've seen the European credit impulse, the euro area credit impulse, just turn negative again, and that suggests that you're now seeing both in Europe and the US, as this huge support from US fiscal stimulus last year is starting to wear off, you see this kind of sagging of the macro momentum, and we really have to see how far does that go. But with the unemployment rate so low and rising, it's not inconceivable that we're getting towards the end of the cycle, and of course that will then be the main story.
Why do I want to own European stocks when I can buy Nvidia?
I think you want to own European stocks if you think either the value trade is on, i.e. bond yields rise, or there's going to be a strong domestic growth outperformance in Europe and the US, but I think we'd be hard-pressed to believe in anything.
But I'm still going to underperform Nvidia. This is the problem that everybody's facing right now in their portfolios. You've got a small group of US stocks that are massively outperforming and basically skewing. You've either got it or you haven't in your portfolio. Does it really matter? If I don't own Nvidia, does it matter what I own? If I do own Nvidia, does the rest of my portfolio really do anything for me? This is the question that everybody's trying to figure out at the moment. And where does Europe fit into that narrative?
I mean, there really was a very plausible case being made for being long European equity. So
there was. That's in the past tense, though, isn't it?
For me, it's in the past tense. But if you look at our fund manager survey, it's a very prominent product we've got. And there are people saying you're already seeing the signs of macro weakness in the US. You don't see it until very recently in Europe. US equities are very expensive. If you now get the growth leadership globally handed from an exhausted US to Europe and you're on very low valuations, isn't that the next leg of the trade? Now, personally, I don't believe in that story, but it is a story and it's a plausible take on the situation.